Very good, everyone. Let's get into another commentary video on trading operations, which is the kind of video where we explain what we do here inside our club. Basically, folks, what do we have here? We have Loews working within this downward movement. It entered a downtrend, meaning it was expected that in the coming weeks we would see, well, stocks falling in the upcoming weeks. And what do we look for when we have this, let's say, previously anticipated? Opportunities to profit from this drop, because it's possible. How so, Gustavo? Profit from a stock's decline? It's when we make a sale of a product that we don't actually own, but that we will deliver in a few weeks. It's as if I set up a store, for example, a furniture store. You don't have the furniture available for immediate delivery. You pay, and then after 40 or 60 days, the furniture arrives at your house. It's exactly the same thing in the stock market. So basically, we have here this downward movement, this well-organized downtrend. On the weekday, on the 18th, we told our club, which is the group that invests in the international market with us, in this movement here, we commented, hey, everyone, take a look. We have some opportunities here, okay? The first opportunity is either we make a stock sale, which costs $239.17 per share, or we identify that there is an options contract that costs $6.14 per option. In other words, I'm going to reduce my investment from $239 to $6 for each asset. What does that do? It creates a very high leverage potential. So I can move a much larger amount of money with less of my own money invested. Whenever we have this possibility, we always go with the options side. Okay? Especially puts, which are the type of options that increase in value when the market goes down. Within our mentorship program, we explain all of this perfectly. So here we have this downward movement, we have this very attractive situation, and the analysis is not a certainty, but the analysis that the probability is very favorable for these stocks to fall in the coming weeks. I ended up choosing this option, okay? I ended up going with options because, well, it doesn't need much explanation, right? You can have the same profit opportunity with a small amount compared to the value of the stocks. The main point is that when we talk about options, we don't buy just one option. We have to buy at least 100 options. So the minimum investment here was $614, okay? So with $614, we made this first move. So what happened? I didn't buy just one lot, I bought two lots, okay? So what did I invest here? I invested 1,200, let's be precise, right? To make it easier to understand. 200 times 6.14, I bought for $1,228, okay? I made this purchase of $1,228, and with this market drop, it appreciated, right? These options increase in value, this contract gains value when the market falls. When we made this move, what did we point out to our subscribers here? Guys, this area around $210 is a strong region. What does that mean? It means that the stock could fall and stop here. It's a price memory where investors, when it gets here, believe the stock is cheap. So there's a possibility it could drop to that level. When it gets there, investors might think it's cheap and start buying, which would make the price go up. So pay attention to that. So we already had not a defined target, but a point of attention here in our trades, okay? So here we had this movement, and I said, look, the idea is to cash out, right? Either when it gets here or when some buying pressure comes in. That first week was a negative week for us. Our contracts here dropped to $3. We paid $6, and it dropped to $3 in that first week. Then in the second week, it started to gain value, and in the third week, it really skyrocketed in price, okay? So in this week here, from our entry point, it had already dropped about 7.5% in 4 weeks. And then in this other week, things got a bit messy here. I ended up exiting during this big drop, okay? At the beginning of this next week here, why? Because it was already close to this region, because it was quite far from what we call our fair price for the week. It could come back to correct, as it's doing here now, and I already had more than 100% profit in my pocket, so I was comfortable. So in 4 weeks, my 614 reached over $14. I exited at 12, and let me check here, 1262. 1262, that's it. It was $6.48 profit per share, okay? So basically, with my 200 options times 648, we have a profit of $1,296, investing $1,228. Look how interesting that is. Drop. 1,228 was put into this trade, but 1,296 was taken out of this trade in 4 weeks. It went on to hit over $14, but I exited earlier, okay? So basically, I locked in profits on this first move. I didn't stick around to see the second move, all right? So I prefer to take profits right on the first move. What happens with this whole amount here? We have $100,000 in the account. These $1,296 represent a 1.29% profit on the total. So based on my $100,000, this gain represents 1.29%. That's almost 4 months of American fixed income. The big point here, and the main pleasure that drives me to be here every day investing in the market, is that I managed to earn practically 4 months of American fixed income by investing only $1,200. I did 1% of everything, but I didn't need to allocate my all. I only allocated $1,228. Amazing, right? This is the kind of movement we can achieve with options, and it's especially strong when the market drops. A downturn, panic, always outweighs optimism and makes the price of these options, these stocks, very attractive for us to profit from the decline. So I managed to get 1.29% of everything I had in the brokerage by investing only $1,228. That's what we teach here. We don't just teach, we're there every day showing the way, talking to everyone, all right? That's it, guys. May God bless you all. Take care. See you next time. Bye-bye.